Welcome to the Property Voice Podcast, helping you to navigate safely through the world of property investing. Get the lowdown and updates, insights and outcomes on all matters property with a splash of entertainment along the way. The Property Voice, a voice to trust among the crowd. Now, let's get started with your host, Richard Brown.
Hello and welcome to another edition of the Property Voice Podcast. My name is Richard Brown, and as always, it's an absolute pleasure to have you join me again on the show today. Now, as I mentioned last week, we're in between series at the moment, and that allows me a little bit of room, if you like, a little bit of scope to share some of my own personal thoughts, some of my top of mind topics, if you like, at this moment in time. Or there could be things that I've had in mind or on the back burner for quite some time in this Musings mini series. And obviously last week we talked about our home as a very tax efficient asset, and had a great response to that actually, with quite a number of people dropping me an email, podcast@thepropertyvoice.net, just asking for the cheat sheet and spreadsheet that I made available to listeners of last week's show. So that's been pretty good. Thank you very much for those of you who've written in. You'll be getting your materials certainly before this podcast goes to air. That's for sure. So yeah, it's been good. But I think just one quick word that typically happened, I guess, following last week's show. One part of last week's show was to talk about taxation. Quite obviously, as I'm talking about a tax-efficient investment, and lo and behold, on the very day the podcast was aired, the Chancellor, in his budget, he made a lot of changes. And he made a lot of changes in particular that affect us as property investors in the buy-to-let sector. And but having said that, the main principle of what I was covering last week has largely been unaffected, I have to say, because most of what I was referring to really sat in what's called capital gains tax territory and lettings relief and this sort of thing. And certainly at the time of recording this episode, and as far as I can see, though those tax benefits have been left largely untouched. So the principles in last week's episode have remained largely unchanged, even if there's been a couple of bombshells that he did lay at our doorstep. And in fact, if anything, the principle in last week's show perhaps has become even more relevant because probably, as most of you will be aware by now, that mortgage interest relief, taxation relief for buy-to-let investors for higher rate and highest rate taxpayers has been capped. It's been capped at the basic rate. So that will definitely impact upon the profitability of standard buy-to-let for higher rate taxpayers. There's no doubt about that. So the other change that was significant as far as the last week's episode was concerned was an uplift in the tax-free allowance under the rent-a-room scheme. And if you remember, I talked about that. It's for homeowners taking in a lodger, and they could earn up to $4,250 under the old rules before paying any tax, and that $4,250 has been raised to $7,500. So it's very clear that that's an incentive also for homeowners to take in lodgers, and again that will have some consequences, I think, as things play out into the marketplace. There was another change, a withdrawal of relief which will largely affect people with furnished accommodation, but it doesn't really affect the discussion we had last week, so I'm not going to go into that one too much in this particular episode, but there will be some fallout. Absolutely, there will be for sure. So let's just park that, and maybe we'll come back to having a fuller discussion around taxation and how that can have a bearing on our strategy and that sort of thing in a subsequent episode. But right now, let's leave it. And in the meantime, let's get cracking, if you like, with this week's property chatter, the main topic of discussion, which I'm going to call very nicely scammers, bloodsuckers, and leeches. There you go, that's setting up the theme. So if last week was something of a ramble, this week is something of a rant, I suppose you might say. So just to kind of give you a different type of energy in terms of the show this week. So without further ado, let's get into property chatter.
Okay, so let's get on with this week's featured topic with Property Chatter.
Yeah, so that was quite a heavy description, wasn't it? Scammers, bloodsuckers and leeches. And to be honest, I could have added in terms like sharks, crooks and bandits into that description as well. And, when there's significant sums of money involved in an industry, as there is indeed with property investment, whether it's on the purchase side, the letting side or whatever, then sadly that will attract people in, less savoury people, let's say, to operate in this space as well. And so this episode is something of a warning, or kind of a cautionary note, really, is what I want to say in this particular area. So the episode has largely been inspired by quite an excellent thread on the Property Tribes forum, and Vanessa Warwick, who's one of the principals of Property Tribes, started a thread for the month of July called Scam Awareness Month. And I've actually contributed to that thread personally, and there's some other excellent contributions that are taking place, and goes far beyond the scope of my discussion today. So I'm going to signpost you to that discussion. I'm going to have a link to that thread in the show notes so that you can go over and see it for yourself. Suffice to say that everything I'm going to cover in today's show is all my own knowledge, or it's all my own current knowledge. I'm sure that I've probably begged, borrowed and stolen it from various places as time's gone by. But a large part of it is also based on personal experience, my own learning, my own mistakes, really, as time has gone by. So a big shout out, really, to Vanessa and all at Property Tribes for really the inspiration behind today's show. Now, the format of the show, what I'm planning to do is to look at some of the common areas or people, if you like, that we could get involved with in terms of our property investment community and experience and transactions. And what I'm going to do is just highlight some of the potential things that could go wrong. And then, some of the top tips. I've got, I think, 3 top tips in each of the areas I'm planning to cover. So it's, as I mentioned, it's not an exhaustive list of potential problems or scams. And neither is an exhaustive list of tips to stay safe. Towards the end of the show, I'll then share some of my what I'm going to call my general principles, and I've got 6 general principles. Really just to keep in mind, top of mind, if you like, to stay safe out there in this time. And for those looking for a little bit more, I'm trying to offer a little bit more, as evidenced last week and again this week. And I've pulled together a due diligence checklist for you, which is going to go into a little bit more depth into the areas that I've been outlining. And that's available just if you drop us an email, podcast@thepropertyvoice.net. Just title it Due Diligence Checklist. I should really get some catchier names that I can say. Due Diligence Checklist. Drop us your name in there as well, just so we know who we're contacting. That'll be perfect. And we'll send that across to you. So without further ado, let's get started. So the first area that we could look into, if you like, is the general area of letting agents. So in terms of, obviously, we're talking about potential scams. So what sort of things could happen? As I mentioned, it's not an exhaustive list, but what sort of things could happen or could go wrong as far as, working with letting agents are concerned? Well, one of those is, you see this from time to time in the news, is them running away with our rent. Indeed, they can be running away with ours/the tenants' deposits as well. So essentially, it's running away with our money. And I think the other thing is that not having sufficient client money protection in place. In other words, separating landlord's money from the letting agent's own money, for example, to pay salaries and this sort of thing. So if they lump it all in one bucket and don't have adequate client money protection in place, there's a risk, obviously, that if they run short of money, there won't be enough to pay us for our rents that are due and that sort of thing. And I think in addition to, the rogue letting agent stories that you see coming up, there's been quite a lot of publicity recently. I'm going to call it the Foxtons case. Yeah, you might have heard of it, but basically the Foxtons case also highlighted another area that is an area of potential risk. And that's really all about with doing additional works, maintenance works, repair works in properties. And there was a landlord who successfully sued Foxtons, and in fact there's now potentially a class action going to take place against them. But I don't think it's exclusive to one letting agent. I think this is potential for other ones to be involved with as well. Is where there are significant administration or management fees for arranging works. There was then trade markups against bills that tradespeople were submitting into the letting agent to pass on to the landlord. There was a markup taking place, and even kickbacks. So behind the scenes, there was even money coming back to a letting agent. Obviously, in this case, it was Foxtons. To actually bump up the bill. So if you can add up all of these different dimensions, simple things like maybe changing a light bulb can add up to hundreds of pounds, because there was money coming back which the tradespeople would have to cover. There was a markup added on by the letting agent, and there was potentially an administration fee or a management fee being charged for handling the works on behalf of the letting agent as well. Now, if it's a full management contract, normally those sorts of things are covered. So there's a bit of a clue there, because my next point is all about small print. So have a look at the terms and conditions that are in place, and look out for things like lock-in periods, additional fees, fees for termination, or fees for the tenant buying the property, etc. are things to look out for. So what are the top tips that we can adopt in this area to protect ourselves with regard to potential rogue letting agents? Well, one of the first things we can do is just to check really that they're a member of a recognised industry body and indeed a redress scheme. And another important point is to check what protection they have for client money, whether it's an insurance scheme or a separate bank account. For example, there's some of the things that they should have in place. So we can do that by just looking at the website, looking at their terms and conditions in any correspondence, and indeed asking them the question. It's always good to have this kind of dialogue, I think, right at the beginning. The next thing really is, I remember when I was a student, there was always this phrase of RTQ. It was. I think we sometimes slipped in an F, but RTQ even stood for read the question. And there was an F, as I mentioned, slipped in there occasionally, but teachers would often say this to us: just make sure that you read the question before you answer it, so that you know what is being asked of you. Well, we can flip this around a bit and call it RTA, read the agreement. So whatever agreement we're presented with, it's worth spending a bit of time just reading it through. Most agreements these days are in what's called plain English, so I wouldn't say they're necessarily easy to read, but they're easier than some of the old school legalese that used to be used. So most agreements are sort of understandable, and I think it's a case of ask questions. If you're not sure, what does this mean? But what we're specifically looking for is opportunities for additional fees, long lock-in periods, or notice periods, and this sort of thing. So look out for that. Ask questions, and don't be afraid to ask for something to be changed. Now, a lot of people will push back if you ask for a change, but trust me, I've had changes on agreements, so don't let it stop you, is what I would say there. So obviously we started with letting agents, and I guess it would make sense to talk about estate agents next. So that is my next area in which we're potentially open to some form of scam. And some of the common ones that potentially can pull us down. One of them is what I call ghost buyers. So obviously, if we're going to put in an offer on a property, sometimes you get the agent coming back saying, "Oh, we've had a counter offer from another interested buyer." Now, that might be true, and I'm sure in a hot market it probably is true. But on a couple of occasions, unfortunately, it's not. There is no other buyer, or there is no other buyer who's potentially putting in an offer better than ours. So that's a risk that we can run. Another potential risk that we can run is if the estate agent fails to pass on our offer to the vendor. Perhaps they think it's too low, or perhaps they're actually protecting a pet buyer or investor, an alternative investor. I'll come on to maybe how in a second. So they simply don't pass on our offer. So that's something else that can happen to us. And of course then it means we're missing out on potential good transactions, good deals. And the other area potentially is what I call brown envelopes. Now, it probably speaks for itself, but effectively it's backhanders, kickbacks, bribes, fraudulent activity, whatever you want to call it, cash in hand, cash under the table, to probably in conjunction with one or both of the previous points that I've just mentioned, particularly when it relates to failing to pass on offers, I would suggest. So, it has been known for agents to either seek some sort of extra recompense personally, or indeed, we might find strange things going on potentially, and it might just be an explanation as to what's happening. So, top tips in this area. Again, it's checking out the reputation of the estate agent we're dealing with. We can often do that online. There's a number of websites we can go to check reputation, indeed, for letting agents as well as estate agents. Make sure, of course, they're a member of a trade body and one of these redress schemes. I mentioned the property ombudsman. Obviously, the property ombudsman would say things like, they won't say it literally, but it will say things like, you can't take a bribe or cash in hand, because obviously that would be a clear conflict of interest, and that would be prohibited. So making sure they're a member of a redress scheme is a good safety measure. I think potentially also dealing with one or two different members in the office could also help, and then other people are aware that offers are being circulated for different properties and that sort of thing. So it's not just confining our activity to one individual. And I think the other one is to try and have some form of direct communication with the vendor. Now, an estate agent is going to resist that for obvious reasons, but if we could have direct communication with the vendor, it's going to be less likely that our offer won't be submitted and that kind of thing. So that's a good idea. And the other thing I would say is, in addition to putting in an offer verbally, perhaps over the telephone, perhaps in the office of the estate agent, is to back it up in writing. And then there's always an audit trail. We can always prove, at least, that our offer was made in good faith. And I would say this one's perhaps to be a little bit careful about. But if we are suspicious, what we potentially could do is drop a letter into the letterbox of the vendor direct if we're submitting an offer, especially if it's a low offer and we want to explain the reasons why. We do obviously run the risk of alienating that estate agent if we're going direct to vendor, so keep that in mind. It could burn the relationship, but I say in extreme cases, if we're suspicious, that's something that potentially we could consider at least. And I think the other thing really is just to probably state the obvious, and that's if we operate with personal integrity, then it's going to be harder for some of these people to operate. And this isn't just confined to estate agents. It's in any of the areas that I'm mentioning. So I was asked once, in a different guise, to pay sweeteners was the phrase that was used with me. And I was working as a finance broker at the point in time. I was like, sweeteners? What do you mean? And basically, it was cash. It was cash to make the deal come in my direction. And I just flatly declined. Well, I didn't get the business, not surprisingly, but my integrity was intact, and I didn't get involved in something that because I think it's a slippery slope. Once you start getting into these types of transaction, then it's very, very difficult to get out. So if we operate with personal integrity, and if all of us do, it's going to be harder for people to operate in the darkness. We're going to be shining light, if you like, there. So maybe it's a little bit of a moral statement, but I think if we all operate with personal integrity and refuse to get involved in these activities, it's going to make it harder for it to exist in the long run. And then we all look after one another in that respect. So the next area, obviously we've talked about letting agents, we've talked about estate agents. The next area really that naturally follows is tenants. Now, what can happen here? Well, tenants can abscond. They could literally leave. I had that recently myself. They disappeared and didn't see out the tenancy, and I've now had a default judgment against them. Let's see if we get the money, but that's happened. But in terms of scamming and fraudulent activity, other things that potentially could come up are subletting. You never know, they may be renting it out as an HMO when we're not looking. So subletting is a possibility. Cannabis farms, you've probably heard about from time to time, is another one. Malicious damage and theft. I've heard of cases of copper piping being taken, electrical wiring, all sorts of damage and theft from properties happening as well. And all of those three can be easily fixed, which I'll come on to just by having an extra pair of eyes, really. But they can all be fixed, these three former ones. But the last one I'm going to mention is a little bit trickier, and that's called identity theft. And if we have any correspondence going to the address especially for example, if it was our former home, it's quite likely we might have a bit of mail that still gets through, even if we've got a redirection in place. There's an opportunity, let's say, for someone to get hold of that information and indeed steal our identity, or indeed try and steal the property. So in terms of top tips, what can we do? The first thing I think we should always consider with a tenant is to do thorough tenant referencing. Right from the beginning. Don't just go to the last landlord. Don't just go to the last employer. Do some thorough checks to make sure that we understand what's going on with that particular tenant. They've got a background that we can check into. And then regular inspections. So always recommend this, especially early on in the tenancy. Within the first 3 months, we should really go and visit that property. And that really puts the tenant on notice that we are going to come, we're going to have a look at what they're doing. And I think, those people who'd be more inclined to do subletting, cannabis farms, and, steal things from us, they're going to less, likely to do that. So regular inspections. So within the first 3 months, certainly, and then potentially 6 months thereafter is certainly what I would look to do in terms of inspections. Having the right insurance is also important. I mentioned malicious damage and theft, and standard landlord policies usually exclude that as a specific provision. So make sure you have that in place, because you never know. That can be really expensive. I know that the person I was just thinking about who had this awful experience, I think it was something like £10,000, was this expenditure to put things right after the tenants stole basically the whole central heating and electrical wiring system in the property. So it can add up to quite a sizable sum, and you don't really want to be taking a risk there for what is quite a small premium addition for a decent policy. And the mention about identity theft, one of the things we can do, obviously get all your mail sent to your new address, and I don't mean redirect, I mean notify everybody about your new address is the first point. But the second point is make sure that land registry have multiple contact sources for you. So often there's just a name and address, of the owner of the property. But these days it's possible to have an alternate name and address. That could be a solicitor, it could be another family member, and equally an email address. And I would suggest having all three. So have all three registered at land registry. It's going to make it extremely difficult for someone then to take that property away. And identity theft, as I mentioned, we can take steps by certainly avoiding there is no mail going to the property and running that risk there. The next category is rogue traders. There's a TV program by the name. You've probably seen quite a lot in this area. But as far as property is concerned, some of the big watch areas, I guess, could be especially on refurbishments, things like hourly contracts. That's a recipe to print money. Works not required. I've had situations where I've been quoted for damp work with a bill of something like £2,000, when in fact it was a condensation issue which was easily remedied by having a £150 dehumidifier installed in the property. So, the work really wasn't required. And then I've even had a situation where I've been quoted for, charged, and indeed paid for works to be undertaken, only to discover later that they weren't done at all. So for example, I had some windows and doors fitted in a property recently. Some of them were fitted, but not all of them were. And so, that was quite a shock. So what are the top tips? Probably can guess. You can go for fixed price contracts with tradespeople, and have a retention to cover works not completed and the snagging list, etc. So typically a 10 or 15% retention is normal, and people usually come to expect that. Get multiple quotes. So, especially for large scale works, I mentioned this damp problem, something like £2,000 bill. I'm definitely going to get at least 2 other quotes there and have 3 quotes. So get different tradespeople in, get different opinions, and then you can work out if, the works are really necessary or not. And I think the final thing is 2 pairs of eyes, have work inspected. So either go yourself, have a friend or local friendly tradesperson or contact, go in and have a look at the works, or even the tenant. Just give the tenant a call and just ask them. I did this once. So I had a banister rail fitted, or actually there was already part of a banister rail fitted, and it went round a corner, so I just finished it off so that there was security walking up and down the stairs. And I just contacted the tenant afterwards. Was that work done okay? And I've discovered that the tradesman, he basically just painted the banister, or varnished rather, the banister in different colours. So I wouldn't have known unless I'd have followed that work up myself, and that's what I did in that particular case. So that's that. And then I guess the other area is what I call bogus professionals or partners that we could potentially get involved in. Now, you just look at things like fake solicitors, fake financial advisors, and dodgy deal sources. So they've all been there. I've personally encountered not the first two, but certainly the last one of dodgy deal sources. But I've heard recently there's a case of people taking on the identity of a solicitor, or not really being a registered solicitor, and indeed mortgage advisor doing something similar as well. So these things are out there. So how can we check? These are my top tips. How can we check that we don't fall victim to these scams? Well, first thing we can do is, usually these people there's a professional body or a professional register. And for example, the solicitors are members of SRA, and financial advisors are member of the FCA. You can check online that these people are who they say they are, what their registered address is, etc. So go and look them up. The next thing is to make sure that anybody you're dealing with has proper client money protection, bit like I mentioned earlier with the estate agents or the letting agents. Similarly with solicitors in particular, that they've got client money protection or escrow or separate bank accounts in place to keep client money separate. And I think as far as the deal sources are concerned, try and reduce the amount of upfront payments as far as possible, is my only real advice in that respect. And I guess finally, there's been a recent news story, in fact, in last week, about a couple who had significant amount of money. It was a house deposit on a substantial property, siphoned off in a different area. So having secure data and IT systems for the partners as well as ourselves plays a part here, because in that particular case, what had happened is the solicitor's email was intercepted from the fraudsters, and an email was sent to the buyers telling them there was a change in bank details, and to send the money to a different bank account, and they did. Unfortunately, the money went amiss. So a kind of a follow-up tip to that is maybe if there's something like that, to make a phone call and check. Don't just take it at face value from an email. And then, of course, we've got transactions or deals themselves. This is another potential area in whole that things can happen, can go wrong. And I think the first question to ask is it too good to be true? Now, some deals are good, absolutely, but is it too good to be true? So you're hearing claims like no money down, or 100% rent guarantee for X number of years, or massive discounts, in a rising market, massive discounts. These are all potential alarm bells. I'm not saying that all deals that mention these words are bogus, but they're just watchwords and for us to be careful about. And indeed there are some very sort of what I call scammy structures, or riskier structures is probably a better way of putting it. In fact, some types of transaction can lend themselves to being open to a scam. Again, not necessarily all of them are. It just means that there's potential extra precaution we might want to take in these cases. One of them is rent to rent, for example, where it's like a sandwich. There's a landlord or owner of a property, there are end tenants and somebody in the middle, and there's quite a lot of recipe for things to go wrong there. Similarly, sale and rent back, that's actually illegal now. Gifted deposits, that's mortgage fraud. Overseas property, that's highly unregulated. So, lots of areas there to get involved in. And I guess my top tips would be to do our own thorough research and due diligence. Take our time. So yeah, fine, a good deal is going to go quickly, but take our time. understanding who the introducer is, do our research on them, take our time before we get involved in any transactions. So take our time with the introducer, maybe then we can commit to working faster on the individual transaction is the watchword. And I guess the other thing, I've mentioned some things are clearly illegal, so check the legality of what we're doing. Next is what I call catfish. A catfish is often put into a barrel of cod and tries to resemble the cod just to keep them on their toes, is where the original term came from. But in modern day parlance, it's basically people pretending to be somebody else, somebody they're not. So watching out for these people. Similarly, we've got what I call this charming man. If people are just too charming and too friendly and too nice, I'm not saying that there aren't nice people, but just kind of check them out, really. Don't take at face value. And what if we get a strange approach? We should be careful if people who are approaching us, they're not known to us. So we don't previously know them, or they're not introduced formally by somebody else. So there's some of the watch things to be aware of there. And in terms of what we can do to protect ourselves, so for example, we can check addresses of people where they're registered with 192.com and other similar websites. Again, we can go back to the professional bodies like the solicitors, SRA and FCA for mortgage brokers and advisors, because sometimes people are pretending to be a legitimate company. They're catfishing, yes, they're mirroring somebody who's legitimate, but they're actually bogus. They're operating somewhere else. So it's just to check the addresses that they tie up and that type of thing, check the website addresses and the email and that kind of thing before we get too involved. The other thing we can do is quite a nice little trick. In fact, I learned from the TV program Catfish, is what's called an image search using Google. And what you can do there is just copy an image, drop it into a Google image search, and it will show where else on the web those images are published on other websites and social media forums and this sort of thing. So that's a really handy tool. And the post that I mentioned, or the thread rather I mentioned on Property Tribes, I gave an example here where my nephew was approached by someone basically trying to scam him out of a sum of money, and the picture used was used on multiple social media profiles. So a Google image search revealed that quite quickly. And I think the other thing to do is don't work on what I call 6 degrees of separation. Now everybody knows everybody through 6 degrees of separation, but I think we need to be a little bit closer to people, especially if money's changing hands. So that means getting comfortable with people, understanding who we're dealing with, finding people that either we know in common or we've got a recommendation that we can go on. So they're my top tips in this area of catfishing. Then, of course, we've got the headline, or the heading, if you like, of virtual community. Obviously, as technology is a great thing, but technology also opens up the prospect of virtual crime. Some of the most common ones are phishing, as it's called, with a PH, phishing, where email links and website links are hacked to channel us off in a different direction and collect personal data from us. There's telephone fraud or telephone scam, where callers ring us up, pretend they're from a credit card company, and just say call us back on the number on your card and we'll be able to validate your account, etc. And then they don't hang up, so you don't actually make a phone call. So always check the number you're ringing, and maybe ring from a different phone, and that kind of thing is what I'd recommend there. I think another one that people are largely unaware of is that if we share our bank details, a third party can actually set up a direct debit just with our bank details alone. So just be careful who we're giving our bank details to is really the watchword there. In fact, that is kind of taking me into the top tips. So avoid sharing bank details with people. Maybe consider using PayPal or that kind of thing, where we don't formally share bank details for transfers. Or we can take the other person's bank details and then validate that information. So if we get it in an email, we validate it over the telephone. Is one example of how we can do that to protect ourselves. I think the other thing is just to invest really into some decent antivirus, anti-spam and network protection software. Some of the big brands like McAfee and Norton and others, but it's worth spending £100 or so on this, because they do actually provide quite a layer of protection. and indeed password protection tools. I personally use LastPass. There are other ones just to help keep our passwords safe and so we don't have to put in easy to crack ones as well. That's another benefit. And I think the other thing, as I mentioned with the credit card example, is just be careful about giving information over the telephone. People like this never ask for PIN numbers, for example. So there you go. They're the main areas that I wanted to talk about in today's episode. And I guess when I was thinking about it, I was thinking, well, there's some general principles here, isn't there? So yeah, what are the general principles? I guess I'm going to summarize them as guard your wallet. So make sure you keep your bank and credit card details safe. Things like client money protection, escrow, reducing upfront payments also fall into that category. So guard your wallet. The next principle is keep your data safe and secure. And that really points to the kind of online protection tools and the telephone scamming type of approach that I've alluded to there. And equally, I mentioned this communication with land registry, having multiple contact points at land registry, because that would be quite a big loss if somebody had actually taken the title of a buy-to-let property without us knowing. And I think to steal a phrase from Warren Buffett really and translate it, is understand what we're getting involved with. So he would talk about it in investment terms, but and I'd apply it similarly, but understand what and who, in fact, we're getting involved with. So that means things like reading the contract, asking questions, and that kind of thing. The next area really is what I call building in safety checks. So things like, I've got a principle, 2 pairs of eyes. It's not just one person looking at something, it's a second pair of eyes, whether that's a contract, a piece of work, or whatever. So usually, and that kind of leads on to maybe having physical inspections. So not necessarily just relying on someone to say, yeah, that's done, is maybe having someone to validate what's been said. And not taking things at face value. So, I did actually write trust no one, but thought that was a little bit too negative. So don't take things at face value is perhaps a bit more of a positive spin. And all I mean there is really just do your due diligence and research. And I think Google is our friend in this respect. And Google 2, 3, 4, 5 pages in is definitely our friend in this respect. So professional scammers are really good at burying bad news, and that's why I recommend going a few pages deep. So just Google companies and directors and anybody we're getting involved in. That is a great starting point. And my last point really in terms of general principle is don't go it alone and don't suffer in silence. We don't have to be the Lone Ranger. We can reach out to others. There's a community. There are plenty of forums that we can ask questions. Who's heard of these people, any good or bad? And also to work on recommendation referral as far as we possibly can, even if we're working outside of our normal area or we're new to something. So they're my general principles. Obviously, I've been talking a lot about the areas that are potential for scams. So it's something of a rant, I suppose, or a cautionary tale this week. And hopefully that's been useful. And I've signposted out a big shout out to the Property Tribes thread to keep ourselves safe out there and not fall victim to scammers and bloodsuckers and leeches. But right now, and until next time on the Property Voice podcast, it's ciao ciao.
Thank you for listening today. Now head over to thepropertyvoice.net for more inspirational content and get updates through our mailing list. Join us next time on the Property Voice podcast. And if you enjoyed the show, please don't forget to rate us on iTunes.